Hey there, Singaporean investors. Tired of sifting through endless news, trying to figure out what truly matters for your SGX portfolio? Or maybe you're wondering how today's market moves impact your investments. Welcome to the Investing Iguana's daily SGX Market Digest for July 25th, 2025. I'm Iggy, and in the next few minutes, I'm cutting through the noise to bring you the critical updates, hidden insights, and my unique take on exactly what happened on the SGX today and what it means for your money. No jargon, just clear, actionable intelligence you won't find anywhere else. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We've crossed the 1 million mark for reads, and with over 900 videos and 500,000 watch hours, content is literally all I do. I also focus on regional and global economic trends, giving you that broader context. So let's dive into today's most important SGX movements because you don't want to miss what's impacting your portfolio right now. The Straits Times Index has been showing remarkable resilience, currently trading around 3,650 points as we continue to see steady institutional buying despite global market volatility. What's particularly interesting is how Singapore's market has outperformed many regional peers, with the STI up approximately 8% year to date. This strength comes from robust earnings growth in our banking sector and strong demand for our REITs as investors seek yield in this low interest rate environment. Now let's zoom in on OCBC Bank, ticker O39, Singapore's second largest lender and a heavyweight in the financial services space. The big news here centers around their subsidiary Great Eastern's strategic expansion into Malaysia's offshore financial hub. Great Eastern just incorporated a wholly owned subsidiary called Great Eastern Labuan Company in Labuan, focusing on life insurance and reinsurance services. OCBC shares have been trading around 1730 Singapore dollars, showing modest investor approval for this expansion move. This strategic move signals OCBC's continued push to expand their insurance footprint across Southeast Asia, which is a smart diversification play given Malaysia's growing insurance market. The Malaysian insurance sector has been growing at about 5% annually, driven by rising income levels and increasing insurance penetration rates. What's particularly reassuring is that this expansion is funded through internal resources without affecting earnings per share, demonstrating OCBC's strong capital management capabilities. With their current return on equity sitting at around 12%, OCBC continues to be one of the most efficiently managed banks in the region. Moving to the REIT space, Frasers Centrepoint Trust has delivered some impressive operational metrics that really caught my attention. Their committed occupancy hit a remarkable 99.9% in the third quarter, up from 99.5% in the previous quarter. Even more encouraging, their cost of debt dropped to 3.7% from 3.8% last quarter and 4% a year ago. This improvement in borrowing costs is particularly significant given that most REITs have been struggling with rising interest rates over the past 2 years. FCT shares have been trading around 2.20 Singapore dollars, and despite these strong fundamentals, we've seen some volatility. This disconnect between operational excellence and share price movement often creates opportunities for savvy investors. With shopper traffic up 2.1% year on year and tenant sales growing 4.4%, FCT is clearly benefiting from Singapore's retail recovery and their strategic focus on prime suburban locations. Their portfolio includes popular malls like Causeway Point and North Point City, which serve dense residential catchments that provide stable foot traffic. Suntec REIT also delivered solid results, posting a distribution per unit of 3.155 cents for the first half, representing a 3.7% increase from last year. Their distributable income rose 4.6% to 92.8 million Singapore dollars, driven by strong performance in their Singapore portfolio and lower financing costs. Units have been trading around 1.18 Singapore dollars, showing market appreciation for their consistent performance. What impresses me most about Suntec REIT is how they've managed to reduce financing costs while growing income. That's quality REIT management right there. The upcoming distribution payment makes this particularly attractive for income-focused investors, especially considering their current yield is sitting at around 6.8%. Their flagship Suntec City Mall continues to benefit from Singapore's recovery in tourism and business travel, with occupancy rates remaining above 95%. In the environmental sector, China Everbright Water announced a leadership change with Xiang Jianping taking over as CEO. The company also established a sustainability committee to strengthen their ESG governance, which is a smart move given the increasing focus on sustainable investing. Shares have been relatively stable around 24 cents, suggesting investors are taking a wait-and-see approach with the new leadership. With China's continued emphasis on environmental protection and water treatment, this could be positioning for future growth. The Chinese government has allocated over 400 billion yuan for water infrastructure projects in their latest 5-year plan, which should benefit companies like Everbright Water. However, execution will be key, and the new leadership team will need to prove they can capitalize on these opportunities. Let me pull all of today's movements together into my daily market take. What we've seen on the SGX today, particularly with the strong performance in REITs and steady gains in banking, really underscores a crucial point for us retail investors. The most crucial takeaway today is the resilience of Singapore's domestic-focused sectors, despite global uncertainties. While international markets worry about geopolitical tensions and economic slowdowns, our local REITs and banks are showing solid fundamentals. This reminds us to always keep an eye on companies with strong local market positions and defensive characteristics. Singapore's strategic position as a financial hub and our government's proactive economic policies continue to provide a stable foundation for these sectors. Today's movements underscore the importance of focusing on quality metrics like occupancy rates, debt costs, and distribution growth rather than just share price movements. Notice how FCT's excellent operational results weren't immediately reflected in the share price. That's where patient investors can find value. The key is to think about how your current holdings align with these quality fundamentals rather than chasing short-term momentum. In this market environment, companies with strong balance sheets, consistent cash flows, and experienced management teams are likely to outperform over the long term. That's the scoop for the SGX today, July 25th, 2025. Navigating these daily market shifts is crucial for your wealth growth right here in Singapore. If you found this digest helpful and want to get my real-time analysis, urgent insights, and a daily heads up on crucial market movements delivered to you up to a week before anyone else sees them, then our premium membership is for you. It's just $1 a month, less than a cup of coffee. Think of it as your daily dose of market foresight directly from my desk. Don't forget to like this video, share it with your fellow investors, and leave a comment below with your thoughts on today's market. I always read them. Until tomorrow, keep investing smart and stay ahead of the curve.